Crypto Sniper, welcome back and delighted to have you. Thank you for those of you that shared and got us to our number. We appreciate that. Thank you for those that remembered to hit the like. We're super grateful for that. It helps the algorithm, it gets us noticed, and that's our currency for hopefully attempting to help you in a way that will benefit your wealth building and also your, switch that beast off. Damn thing wants to talk always just when you're about to stream. So let's get straight into it and talk about the world of Bitcoin. What has been going on? We need to do a small recap. Why are you here? If you value that which we do, we're going to highlight what we've done recently in terms of crypto super quick and do the very fast flyby. So if we look at the daily time frame, we've always got to start macro to micro and go running in through so that you recognize everything. Where have we been? So a couple of big events. We had the head and shoulder. We're going to be referring to these key levels. And it's the only, I'm on Twitter. I see what other people are saying out of curiosity as a counter indicator. Sometimes people that are quality, that make good points, to stress test my own views. Sometimes it's helpful. It's kind of like you want to be opposed. You want to naturally be scientific of endeavor. How do I be wrong? In other words, someone who may have an alternative view that's well justified. It's interesting. It's something maybe I haven't considered. You've always got to avoid. Certainty is instant death in trading. And you have to look at it over a long period. You sometimes have to sleep at it. You have to look at your big time frames, your medium times, your small. You have to consider all things. You've got to recognize your God market. You've got to look at your 360-degree view. What's a dollar going to do? You've got to keep making sure that you're not getting sloppy and slipping up on one of them. So a couple of key points. Where did it all start? So we've been carrying you with a first cup gold nugget. Most of you know that. That was way back when you could have got Bitcoin in about 9,500. We said it's going to be a major trot and it's going to have overperformance. The standard target is in around the 26,000s, but you're going to blow through that and you continue to go up, and you had a couple of pullbacks along the road. Then when things started to get a bit heavier, so once you're out of the target range of your macro pattern and you're in overperformance, the volatility starts to get bigger. We highlighted the bent orange or the bent banana, I think I said at the time. That was the rounding tops over here. We also spoke of the rising wedge. That's the head and shoulders. You had a rising wedge into that right shoulder. We highlighted a key level, and I'm recapping this so that you understand the significance of a key level that no one else is talking about. I went on that rant about watching other people on Twitter. No one talks about the 47.5 level. You only hear about it on this channel. Just haven't seen anyone do it. Maybe if you do, let me know. But that was the neckline. That was the key neckline that existed for this structure that ran all the way through here. So you had your complex left shoulder over there. You had your right shoulder over there. You have your 2 points where you've met. And then you had this head where that's a head, that's a left shoulder, and that's your right shoulder over there. Such a key level. At that exit on that wedge over there in and around the 59s, warning, you could trade through 30K for a 29 target. Down here you came, boom. You actually ran it over there. That was your 29K. You could have shorted if you wanted. I largely got out of most leverage trades. Didn't execute perfectly. Left one on that did a bit of damage, but cleared my blue pot out and everything. So it was worthwhile. Most of the time, it's my own execution on method where I could have done better, not the method itself. The method is absolutely awesome. You might have executed better. So you get out there. Then we reasserted that each of these 29K breaks, which happened a number of times here, here, and here, are accumulation points for the entire area. Apart from one short spell, and that will recur again because we'll talk again now. And this is get off risk. It could go wrong. We had a squeeze over here. It broke to the downside. It could have continued and been a spill, but it didn't. And as soon as that risk was gone, that's it. Back to bias. And that is worthwhile. People that understand trading, and this divides the crypto crybabies who are just blocking loads of people now. I reckon we might have 3, maybe 5 years of life left necessarily. There's a crazy ass things going in the world. You got to live as well as you can. You got to work on your mental health. You got to accept what's in front of you, and you're going to recognize that which you can affect and what you can't. Dealing with crypto crybabies who don't own the outcome is not my bag. I've no interest in spending time. So I'm blocking about five people a week off Twitter feeds and various other things. The key element is it's much cheaper to get off risk for a possible outcome that doesn't happen and get back in once that dark shadow has passed, than to sit and hold thumbs and hodl through a capitulation. Ask the guys that bought at 64K and then saw 29K about that. It's safer to do if there is a real risk that is material that can happen. And so you can have a view, there's a real risk, it's a shadow. Get out, be square, and then you can say, the risk has now passed, it's been dissipated, there's not been the follow through, you can get back in. And you may pay even. You may have to get back in a tiny bit higher, depending when you get out. We tend to recognize these things early. The cost of paying is an insurance premium on your house burning down at a time when there's fires in your entire neighborhood all around. It's summer and the fire engines are slow and overworked and everything. You pay a bit of a premium for that. But guess what? Your house doesn't get burnt down, or if it does, you get paid out in full and you get a new one. And many people don't understand that conceptually. It's not about being right. It's about not being on risk when it's the most dangerous time to be on risk, and then getting back on risk when it's actually low risk and everyone else is scared. And we're going to give you a couple of examples of that. Anyway, we then said falling wedge. Short recap, as I say, because it's going to bring you to all the lines that are on this diagram that I'm going to unveil in a second. Falling wedge, you want to be long early. We were long before that wedge broke and kept it on, and you benefited from a full reflation all the way up till this point. Then again, started to round, not as volatile as up here. Not as volatile as up here, but started to round a little bit. We're getting close to the end of our move. We're going to get one more surge. We gave you the flat-bottomed HVF. We said to you, 52,000. We're going to run 51,790, our target. You're probably going to just run 52. Then there's going to be potential for some sell-off. That's exactly what happened September the 7th, and you got a shock sell. It even surprised me a little bit for one candle day. I was away at the time, so it was, oh, that's gone down. And then a little bit later in the day, man, it's gone really down for a single day. So that continued to build. We'll be showing you those levels. Where did it occur? 47.5, and on our funnel of that flat-bottomed HVF right there, and the 47.5 right through it. Why? You're going to keep getting these numbers put up to you. So the reflation call was likely back to neckline move from here. It almost was a natural target for you. You could have taken off over here at the 47.5, which was the neckline from the recovery on there. There would have been a little bit more, and then it got its first proper slap down. Now you kind of, in a way, this whole event, you kind of got a microcosm, and our reactions were pretty similar and standard, and that's exactly how they should have been in this area here, over there. In terms of what happened here. So I'm going to drop the time frame and take you into what happened on a smaller time frame, because this almost was a baby version of that. Almost. Don't be too associative in your thinking. What did I just do? Make it go away, make it go away, make it come back. Good. So let's show you, and we're going to drop down. Understanding Bitcoin is understanding the direction generally of the alt crypto market as well. So Bitcoin is like your forwards. They win you the game, and then the alt's determined by how much you're winning, and will give you more points. They're like the running backs. Okay, so here was that big sell-off. Let's put the lines on now. You're about ready to get blinded by science, and here it comes. So there was the flat-bottomed HVF. There was our funnel. Right the way through it. It straddled perfectly the solid blue line. That's the 47.5 right there. That is that neckline. That's why I gave you all the history again, to remind you why that is a big ass level that no one else is talking about. You only hear on this channel. Then you got the big move up. Guess what? You ran the 50K. Classic. That's the other big line we have on our level. And the other one we had was 44. Also from way back when. I can remind you about that one too, if you have the time or inclination, or you'll be in our premium community. We've non-stop spoken about the 44, the 50, and the 47.5. Anyway, so this entire structure formed feet, boots, slightly in the water level of the 47.5 broke. It gave a target 51,790. We said, that's it, you want to be done. You had a little bit of tip-tap-toe and marginally higher highs and a little pullback. All why? Guess Key level of significance, 50K, just like it was a relative high just run over there when you set up the structure in the first place. Like that, bang, you break, you go, and you make the target of 51,790. Barely a few segments later, you're floating at around the 52,800. We said the 52 likely on overperformance to just be run. What do you then get? Smack, all the way down. All the way down. Where? You guessed it. 44, spike run and rally. What happens? Heaviness. Not so much a falling wedge like the bigger time frame post the head and shoulder to the left over here, but a channel. We're the first to identify the channel. We're the first to we put splitters in it. This is a key concept of HVF method. I'm now seeing other people that are drawing channels and wedges and are doing splitters. So we're being imitated. That's good. It's flattery, I suppose. But I don't think they understand all the reasons why they're there and what they get from it. But that I'll leave to them. So you are in a grinding out basing low. We said repeatedly on Twitter, people say, but the chart looks terrible, it's bearish. Guess what? At the time we called that falling wedge on the macro, we dropped to as low as 10. That final test to the 29K level, extreme fear, 10 on the market sentiment. Here, when we called the long, just after the 44 run, the final capitulation, an attempt to go up and a capitulation slam down on this channel 44, go long. And to prove that we went long, because you still get the odd comment, they don't really trade, they just sell courses. We don't sell a course. We sell community with theory, with chat, with interaction, with updates, with media, with ongoing training, with triage for people that get their money management wrong, systems for trading, mental psychology trading, emotional for being a better trader, daily updates, regular, real, build a community and support people in building wealth. Links below. But anyway, if you want to say we sell a course, it's a grave inadequacy, but they don't trade. So every now and then we show a trade. Obviously, we show winners. We get plenty wrong too, but our stop losses are small. So how did that go? I actually wanted to get in under 44, as close as 44 as possible, but because of putting on some reasonable size and I'm spooking the market a little bit, ended up a fill of 44,138. What did I take? God market this time. Most of what I've been doing is alt trading. Why? Because on the upside, when Bitcoin is permissioning a bull market, the alts, the best, and we did relative selection. We gave you Solana before everyone else started talking about Solana again for one of the biggest overperformance moves. Before that, it was Ethereum, and Ethereum was leading the race on the FBTC chart. We've given you a number, including OMG and a variety that were all in setups for free views. There's many more that you missed that were part in the community. You'll get some things later. You've got to respect that because you're free view and other people are giving of their energy. Anyway, what happened? 44, why did we do it? Well, first you've had your macro spill and your test of 44. And the 44 level snapback electric fence rally. Boom. Kind of like the 29 way back in the head and shoulders. That's right. So what did you then do? Still not strong. This is letting out all those who want to sell. More sellers, marginally lower low. More sellers, marginally lower low. Is that selling like that selling? No. The momentum is dissipating. All the people being let out. Broadening structure. We expect another sell. What do we get? Another sell. What did that sell do? It ran down and supported just above the 44. Said to the community, I want to see that 44 run. It feels like that key level needs to go again. It started to pump out of the falling wedge that you see there. Pumped, got to the other side of the channel, slammed. 44 run. Now we're long. Final capitulation. High volatility and momentum at the end near a bar. Can't hold it. It was showing that dip below the 44, no follow through. Hammers on the smaller time frame, hammers. In we go, 44,138, and we start to trade for the upside. And that is a reflation Bitcoin call. This is what we said, reflation. So what did you get out of us on YouTube? Some guys say, you never told us. You said it was bearish, close everything. Yes, we had some structure that was of a concern over here, this broadening pattern. I think it was around here, said, I might take out. I'm going to close everything on Blue Pot, which we did. And then a day later, did just a short update. And this is the thing. You're not you're free view. But because I said something, I felt obliged to give you an update that the view had now changed. And I said, that's it. The storm has passed. The storm has passed after that. The storm has passed, and you're good for getting back in. You're good for getting back in. And then we shared through Twitter. So if you're not following us on Twitter, you will miss certain updates if you free view. Remember, you aren't paying for a community. I don't owe you anything really, but I want to help you. But if you're following Twitter and you've subscribed and you watch all videos and you capture the first thing, you will get some idea of where we are and a reasonable idea of what we're feeling at the time we're feeling it. You are not going to get, and I'm not obligated to give you my latest, greatest thoughts in that very minute. There's other people I'm serving, including myself and in my community. Okay, so what happened? We go long in there. And that was Bitcoin. So we show you this because people say you don't really trade. You sell courses. As I've said, grave inaccuracy, but we seem to be getting it a lot. So here's the entries to prove to you that we do the trading. We go in at the long, 44,138. First call is roughly 47.5 or 49. That was my original intention. This shows execution versus intent. The method is excellent. How you execute in it is usually where the problems come in for many people. Later on, if we just go back into it, we got an HVF in structure on the smaller time frame. So let's go show you how you can, even on a very low time frame, apply a method that still holds value in principle, right the way down to a small time frame. You'll see this tiny little bit. Overnight, it held. We're doing an update here. Overnight it held. Boom, boom, boom. Made a little structure. Beautiful. So you've gone from getting in early around there. You have a stop at that low. Last time on a grinding. So first you spill hard. Then you have a grinding channel that is marginally lower lows. Within that, a couple of sell-offs where all the last week bedwetters are getting out that didn't know what they were doing and are caught in the wrong part of the market. And then a final pump and slam that is what I call the bookend. The bookend for major moves are melt-ups and final capitulations. Always. They are bookends for final moves. And they shake many people out. People can't bear it. It's the suddenness of the volatility. If you are sitting there and you're watching it, it's an absolute gift. You just go straight in and buy. Guess what sentiment was? It had gone from 73 to 30. Fear. If it was 25, it would have been extreme fear. It was at absolute fear level. What have you got? Reflation. What is it today? Now that it's reflated to these levels, retail is always slow and reacting. And if we reset it, you can see it's still set on when the day when it was 30. It's now at 53. And it was at 30 on Monday, I think it was. So you can see how they jump around. It's perfect setting. Retail is normally wrong. They like moving averages that they trade. They lag. They're dragging a brick on a bungee cord. In fact, they're often dragging 2 or 3 that sometimes cross over each other and they think, wow, that's significant. Oh, yeah, they do that actually. It's kind of insanity, isn't it? I know. Anyway, so volatility expanding. We've got an overperformance structure. What happened here as you were getting in there? You're squeezing up against our legacy funnel, you're going to run. And what tends to happen is you break a key level with real momentum, 47.5. There it is. Wind up, you smash it, you respect it, a little bit of a broadening structure stroke flag there, and you follow through and you clear the funnel all the way through. Then what happens is you become support. Then you broaden, you're getting a bit tired. You support and you spill overnight and you're back into the funnel. What previously was now a resistance has now turned to support, a macro resistance. Remember, this is still the neckline of that massive head and shoulder that was the entire halftime oranges capitulation that everybody got so badly beaten up on, 55% sell-off that you got the advice to get into stable coin on the right shoulder for. Now that line is still here. It's still relevant. It's as relevant as it ever was. It keeps getting validated. And then you've had a rally now, and this brings you up to date as to where Bitcoin is. It's on the other side of this funnel now with the 47.5 backing it as well, a real spinal column that is strength. That is strength. You've got backstop at your back. Should have done that in the other color with Fat Cokie. So I am watching your comments, and I will check them and I will come and review them. Feel free to comment and chat. We like activity, especially if it's sensible and you're not a spammer. So that is what's happened. You jumped a big fence, a big hurdle, maybe a concrete one kind of high, and now you've got it at your back. That is protection for now, for possible downside. However, if it breaks, that means a real loss of momentum and a more significant pull back. That means if it breaks, a real loss of momentum. I'm not saying it will break. You've got a strong wall at your back, but were it to give up, recognize that it represents some quite big strength and it shouldn't be failing. If it does, that means something else is happening, and we have something macro to show you that it could be. And that would be the bear version. That's not us being bearish. We're saying that possibility, which is below our probability and not our first choice scenario, is there and does exist, but it's at the 30% possibility rather than the 50% possibility. But if it suddenly becomes the 50%, that probability-o-meter swings as price behavior gives us new information. That means we move a new song into number one, and it's a sad song. It's a bearish song, just like record sales. A few small moves and things can start changing in the probability meter in terms of what we expect next. So let's cover the two primary probabilities or possibilities that could be going down. As I say, I'm watching your comments. Do keep them coming, and we have someone watching them as well, and they'll pipe in the best questions, the sensible ones, into the room. So I want to show you something else. These two existing possible outcomes. There's one outcome that's slightly dangerous for Bitcoin. As I say, it's not yet my probability one. We have now got above a strong vein of support. However, if we were to impulsively break that vein of support that I just showed you and drew so beautifully in TG Pink, especially for you, the special ones that are not too sure which gender they are or would like an operation, I think you need more support, and therefore I am using your color, and that's it right there. So if we were to break, and it's not that far away, but it is big level of support. You can see how much we had to come up. It is that neckline, it is that funnel, all that stuff I've already mentioned. Were we to break impulsively down through that, there is a possible risk. Now, you know the 44 is another one of our fave numbers. So what could happen if that were to happen? There's a slight possibility. In fact, it's not too slight, but it's possible. We have this real slowing coming up into here. You can see it, the bit of volatility. And then you have that. And then you have your boom chakalak, your 44 interaction. Then you go up, you wound up, you broke through the 47.5, ended up at the 50, and you've gone on. So this is all, in simplistic terms, another visit to the 44. Now, that's a problem because you've now had two visits to the 44. Were we to have round tripped with reflation here, go no higher, because we're already kind of a tiny bit higher than this shoulder. We generally like weaker right shoulders, but there was a long basing period here that took a bit of time, and that might have flushed so many sellers out that you got a little bit of a boost on the upside. But were you to sell off harshly, you shouldn't wait for that 44 to break, because then you could have, in separate terms, the possibility of a left shoulder all in there. Quite an interesting, I'll draw it over in blue. A head like that. And then back to pink. You could have a right shoulder like that. So an abrupt downside move round about these levels would not be a good thing for Bitcoin. Remember, we also had, in support of that scenario, we also had the rounding that occurred here. Maybe needed a bit wider. There was that softening, and we said you're into your last move up with this HVF, and you did just great to make the target there, which gave you literally the high. You didn't get much overperformance, and you got slammed. And there is a concern with anything that sells off that hard. One of the things I ask is, where's the bid stack? Where's all the institutions waiting to buy at value? A bit of a slump from 52,000 to 44,000. And in fact, it traded lower at the extremist low. You actually traded in and around 43 something, low 43s or 42.8s, in fact. Such was the volatility. So you actually went from 52.8 to 42.8 in an extremely short time, which is $10,000. So now I'm making the case for you to make you slightly concerned, or at least aware of the risk. You dropped 10 grand from 52 to 42.8, 52.8 to 42.8. That is a heck of a thing to do in a very short time. We shook out that volatility, but I haven't forgotten. And I haven't forgotten how far and how wide it came and the lack of bid structure in that bid stack at these levels. So I am still semi-aware of potential bear issues. So this reflation into here was, for the short and medium term, a great trade. As I showed you, we got in at 44.1. We took the target in the end on the small HVF, but we knew it would probably overperform, and it did. It continued to go on up, and it went to the 47.5 target that we said. And in fact, we got a little bit higher to around 48. But what if it's just run the 47.5 on the bigger time frames in the same way it did there and there, and it ends up getting a bit soft and churning, and you start to later in a day or so, or maybe over the weekend, get a little bit hit. I would be very uncomfortable if I saw any form of momentum that even closely represented the momentum that started this event over here. Because that thinned out bid stack could now apply over here as well, and you could find yourself at the 44. You'd have a small bounce, maybe a small wind up and go, or you could even run straight through it and then have a return move and then keep going. And where would that target take you? Well, you can do the maths. 52.8 to 42.8. Well, we're taking the 44 as the neckline, so it's round about 6,000 to 50. Add another 2.8 onto it. It's about 8,800. Take 8,800, call it 9 grand or 44. You will end up with a number like 35,000. That's the best possible scenario. That is the bare possible scenario. Note, we didn't go pumpermental up here. We were pretty low vol and crept up. We didn't break out HVF style up there. We've been pretty low vol. So I'm going to take away all those lines and you will see the world with clean eyes again. That is a pretty serious risk that you want to be early on being warned for. Do not tolerate a break below this red line. I would get defensive. Just telling you what I'll do. And I can be wrong in the same way we got defensive over here with that, and the same way in the beginning, just once, we flip out, we let the danger pass, it refloats back up, there's no follow through. Good, we missed the possible lightning strike, we go back outdoors again. It's smart. Does it cost you a little bit every time? It's like buying insurance. It absolutely costs you. And the cost of having your house burnt down in proportion to paying a month's premium during the fire season, high heat, absolutely worth it. And then you're off policy again and you're taking your own risks again. So that conceptually is one key idea I want you all to think about. And let me just warn you that a move down to 35,000, a number with a 35, it could be 35.9, it could be 35.1. If a head and shoulder performs, don't forget a head and shoulder can also overperform, would certainly represent quite a bit of pain at the current 48 level for your alts. Because if Bitcoin's going to drop from 48 down to 35, you're losing 13,000. You're losing 13,000 over 48K as a percentage. You need a 2x, 3x, and 4x that for the higher beta, depending how low cap your alt is. So that's your bearish scenario. What's the bullish scenario? Well, we're going to see. We're going to see which one it does, and only the market will tell us. So at the moment, we're guessing. What's the probabilities of each bull, bear scenario? More bullish scenario is we continue to do price behavior that grinds its way up and you end up with a small blow off that runs you through the 50K. Major level there. Major level there. You can see it interacting there, and then you could see the wind up that happens. So first you just run it and you get resisted back down. Full leg sell off back down to there. Then you just run it again. You get half leg back down. You only get sold to there. Third attempt, you trade in it and around it and squeeze and break up. And now you've conquered the territory, and now it's supposed to be support, unless, of course, you have the September 7th flash crash bid stack void. And that's kind of what we were at that time. Very little support, only a small amount on a much lower time frame, would you see. Okay, good. So the bull scenario, we continue to creep up. We just run the 50, and then we come down a little bit in a more leisurely event. I need to go up the time frames. Let's have a look at some of your comments in the meantime. The sensible ones particularly. So what have we got? Whoops. El Salvador were doing something interesting. I lost that one. Said somebody. El Salvador were thick choosing BTC. Should have chosen a more progressive alt, says anti-fiat investor. I think they want the security of the big brand. I think it's about credibility. And they don't want to give too much joy. Arrow wants to know about OMG.
Yeah, exactly. OMG and eGold, if you can.
Elrond and OMG. Yeah, we'll have a look at a few alts. We've got to finish doing Bitcoin, guys. You're too quick. You're way too quick. This is your direction. You want to know about OMG? Bitcoin. It's kind of like going to gym. If you want to grow muscles, go to the squat rack. You'll grow hormonally. You'll grow all your muscles squatting. Everything else you get will grow more. It's kind of like all deadlifts, stroke, chins, the macro compound movements. That's going to trigger the growth. You just have to do a little bit of work on the biceps, and the hormones and the recovery will do the rest from the big exercises. So you've got to remember where we've come from. You've got to keep understanding this. So on a bigger time frame, there's a couple of things that could be happening. You are here. In actual fact, it wouldn't be a bad thing. Now, I know you all say, don't like your bear, you're a bear. I'm not anything. I'm just watching what it's giving me and keeping my mind open. I'm potentially a bull, I'm potentially a bear. I recognize there's probabilities, possibilities in the markets. Got a bit of a decision to make around that 47K line. Is it holding and going up, which means we probably go next 50, which could mean one thing. And if we are not, and we end up letting go, what would we do? If we let go and had a head and shoulder, and you ran down to the 35.9, let's say, somewhere down there, you would in fact probably get something like that, which would actually be a very beautiful trade. Because yours truly will be all over that on Bitcoin and macro longing it. But that does require to have a nice structure, a potential down leg from here, for which this could be the first slap in the face warning. It is a bit of a potential slap in the face. It is a potential warning of a more sustained move to the downside. We have been trading the reflation short term on the rally leg with a bull bias, only because I'm macro bull bias. But I recognize that this could reassert downside, and it isn't exactly pumping back up. So the momentum belongs, actually, the greatest momentum that has occurred in the last few weeks is the September 7th crash. And it often happens like that at relative highs. Look at that momentum candle there on that right shoulder. Look at those momentum candles there on the head. The real momentum belonged to the bears there. And right now, that risk is being underpriced. So as fear goes back from 53 to 70 something, as the market just drifts around at 47.5, and everyone slowly starts going, the moving average crossover, 50 crossed over 200. And blah, 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 is round about then that lagging indicator, when you've walked around your house enough that you're bumping into the brick you're dragging around with you, that's still stretched out in the last 3 rooms ago that you were in, everyone goes, holy, that's significant. That's usually around the time when you're about to get a dump to the downside. So you can't underestimate this risk. And let me just say, it will be an absolutely perfect bull scenario, but you would then probably be definitely extending beyond December on your bull cycle. Because if that were to happen, we're already, what are we? We're mid-September. that sell-off were to happen, you'll be another week or two in the down leg and the recovery and working your way back up. You'll be coming to the end of September. Then you get to October. You know, you'd only really get going possibly mid-October, November, December, and many people just have this December cycle as fixed in their mind. And the more people that have it as fixed in their mind, the less likely it is to occur in my view. So a sell-off here could then see, and you'll have the mother of November, December, March, Aprils. And they'll be beautiful. It just does mean it's pushed out and the cycle extends. Don't forget, they ain't going to taper. They might try and talk, but the next thing they'll be doing is printing, not tapering, on any meaningful level. I'm not talking about smoke and mirrors and a little bit of putting petrol on one side of the fire here and putting a bit of water on the other. I'm talking about meaningful, legitimate attempts to taper will not take place. The next major Federal Reserve and other central banking cartel proliferators, because that's how they tax you. Inflation is how they tax you. Destroying the buying power is how they tax you, because they have the assets that appreciate and protect them from it, that keep inflating upwards. And you don't have assets in your balance sheet. You have a lowly income, a peasant's wage, and they keep reducing the cost of the buying power of your money, and the cost of living goes up. And you now have to have your wife working and your kids working just to maintain one household. That's their game. So fiat proliferation is the game of how they bring about this world economic domination. So that was the bear scenario on the bigger time frame. How does the bull scenario take up? I actually prefer it less on the bigger time frame, but what you'd need to do is get back up to that 50, for example. And again, you will then fractalize a setup, which again I would trade, but I'd prefer to trade the big one like that to make new highs. But I think that slap was pretty meaningful. We need to do a lot of really impulsive upside to take it back and make it look like it was a once-off bad result and show some guts and stamina and real stack building. And so far, I think you'll agree with me, this is not shooting the lights out, this inflation. I traded it because it's a reflation trade, but it's not shooting the lights out. So this option can happen. It needs to show a bit more backbone. We need at least 50 to be run on this bull scenario. And then we trade and we go new highs. So Bitcoin is the god. This is the chart that worries me most. How do we go more bullish up from here? And part of me thinks there's a decent case to be made that we actually need to go a little lower. We need to go down. And a settling line down there, in and around here, shaking out, could actually be macro a good thing for both your trading, but you won't like it while it happens. You've got to take your medicine every now and then. So that's it. But if you're the bull scenario, we do a smaller version of the fractal like this. Many people say, we're totally shocked. So I saw a couple of people, big YouTubers, that were saying, wow, you know, you should go long. They said you should go long on September the 6th, and they got smacked. And as I said, we gave you the HVF target. You said you should be reducing at that time. Two bigger YouTube channels than us, substantially bigger, on the 6th released Bitcoin breakouts because Bitcoin momentum is up. That's called recency, following the level. They don't trade to the level. They're following the current momentum. And they didn't see the sell. They were saying Bitcoin breaking out here on the 6th, the day of the 6th, one day before major smackdown. And we were the only people saying reducing, reduce now. And why is that? Because of key levels of significance. We had the target. We also had a key point that other people don't discuss, and they seem to have forgotten about their fibs. We had just made from Bitcoin, from the halftime oranges, the biggest retracement since the first cup gold nugget move up to 64,000. The single biggest bearish move that has spanned, I mean, the last time we were talking highs on Bitcoin was April. And you're at the end of the year, just about. Final quarter of the year. October starts soon. You're in the end of the third, about to start the fourth, literally by a matter of weeks. And you were hitting at that level, apart from hitting our 52K that we gave you as a target, apart from hitting the 61.8 fib of the whole move down. And I saw no one talking about this. There she goes. Golden mean. Let's try that again. I didn't draw it very well. 61.8% fib. So let's get this straight. Two massive channels, significantly larger than us, released bull, buy Bitcoin, this is it, it's breaking out, into the 52K high on the 6th, and then the people that followed that YouTube advice watched a sell-off to 42,800 the very next day. A 10 grand slap in the face, and if they bought alts, the percentage of that would have been even more brutal. At the point that Bitcoin just retraced 61.8% of the biggest sell-off that gave you the halftime oranges and the end of the first half of the bull market. This entire period encapsulated from April till the breakout that only occurred late in July, the 20th of July after the final low. Man, oh man, YouTube quality of technical analysis is not at its peak when those sort of things are happening. And can I also point out, let me also point out on top of why people never saw this. It's been a while since I'm streaming, so I'm covering a bit because we were away when this happened. At the same time as Bitcoin traded 61.8% on its fib, and two major channels said Bitcoin's breaking out, this is a super long period, get long. Two major channels released videos on the 6th. You would also, within millimeters of making a new high, on the total two, which is alts, and the total all coins, including Bitcoin. And it's absolutely natural, if we are to be the bull scenario, so I've given you a bear scenario, and I've also given you the smaller fractal bull scenario, it's very, very likely that to make a new high, you always stop short of it. And you pull back and you wind up to go. Because during this total two period, you've been going non-stop from the last call we gave you, which was the accumulate your alts for the falling wedge break. And the Ethereum chart we gave you with this falling wedge countless times. I remember explaining why that grind line fitted so perfectly under that par, because it's not normally how I draw it. We gave you that. We said 1,750 was Ethereum. It's trading 3.6 today. It actually went almost to 4K. You've walked out consistently. Key level, 1 trillion. Pullback almost to that 1 trillion mark. Alts walked out consistently without a single real meaningful break. And you're coming within spitting distance of, on the alts, an all-time high market cap. And no one thought to think of these people that that could happen. As Bitcoin met 61.8, none of them had the flat-bottomed HVF with a 51,790 because they don't understand HVF, and none of them had the key level of significance of 47.5 because they don't understand key levels of significance. They're shit. It's fucking shit, TA. They should be ashamed. Sorry. Pisses me off. People got killed on that sell-off, and it was unnecessary. And that's what happens because people don't know what they're doing. Go have a look at total. It's okay to miss one thing. You should never miss 10 things. Total, including Bitcoin, also grinding higher, rounding loss of momentum here, also. And then a squeeze with a final surge pushes you up. You had to squeeze. Where did the squeeze come? 2 trillion market cap, key level of significance that you'd only spent a small iceberg time above. Ever. In all tokens, 2 trillion. Only ever. Clear signs of rounding momentum, a final squeeze higher, just like the HVF, flat bottomed on Bitcoin. Key lesson, TA, there it came, boom, up she goes, marginally falls short of the previous high, exhausted, trying to get up there. Smackdown. Where's the base? Oh, surprise, 2 goddamn trillion. Kissinger's busy there, sitting there, manage this thing. Don't let it get too far away from 2 trillion, pull it back. Literally. It's almost like the numbers being given. That's a bit of a fun, fake conspiracy concept for me. But there you go. This thing is managed. There's your final pump. You've been losing momentum. You've come all the way out of that same wedge draw that we gave you the full script for. from there on a reinflation long. You got up to the 2 trillion mark, broadening, getting more volatile, huffing and puffing, took a bit of time, had a final wind up and blow off surge, and those guys came out and told you, buy now. But they were nowhere down there. That's what we've got to tell you about crypto trading. That's why you've got to be careful who you listen to. That's why you've got to learn to do this thing for yourself, because even I will make mistakes, but you should never make 5, 6, 7 misses on key levels that other people are getting. By the way, key secret, note the Fibonacci level, 61.8, 2 trillion mark, 61.8, basing support currently. So overall, when I look at this, I still think we can do the smaller wind up. And then when that smaller wind up happens, just like it happened there, to reach for the new heights, to take you away from 2 trillion, the entire wind up here happened on the 2 trillion and the 61.8% level. You go up for the upside. If we do this, then we take new highs. Done. It will be done. Then you go new highs. Or we soft, we break this. If this 2 trillion mark is broken and you close below it on this daily time frame, run. Because then you're going for a deeper dip. Maybe the stock market's crashing. Maybe the control structure setting fire to what they haven't burnt down yet. Who bloody knows? But run. Because we haven't closed below it since that HVF in there. And if that support goes, you'll probably find the Bitcoin scenario is also coming down. That right there is technical analysis on the macro level, on total 2, on Bitcoin, using Fibonacci's, using key levels of significance, using HVF method, and you still haven't finished your work. We watched what happened on the dollar index. We watched what was happening on the dollar index. As on the 6th, as we were saying, reduce, get out, you've done well, you've been in since the falling wedge, and everyone else, they're going, this is a great breakout charge. This is what happened. We were watching the dollar index. The dollar had been weak. The dollar had been weak. It had fallen out of this rising wedge. And it was down, and boom, you get a pump in the dollar. You normally get a return move from a falling wedge break, just like you did. Dollar weakness. No, we'll still do tapering, all of this. Risk off, boom. Silver markets, gold markets, the exact same. The anti-dollars. The anti-dollars all should be watched, all during this period. How many of those YouTubers were watching the silver and gold market at that point? How many do you think actually understood what was happening? How many? I'm saying 0, because they have no long-term macro technical analysis experience. They do not understand what 360-degree analysis is. They don't understand that the dollar is part of this equation, and they don't understand key levels of significance, HVF methods, how and when to use Fibonacci's, and not to be a goddamn momentum chaser just because it looks good right now in the minute. And that is why you should be on the link below. You should already have booked your call, because what you will lose by not knowing these things is far beyond, by a multiple of infinity virtually, what you are, the mistakes you will make by not understanding this and following these other people. So, big old preach. As you can see, gold, smackdown. I just did a review. I just did yesterday a discussion with precious metals, and I said, short term bad. We're probably going to sell off. I'm just seeing it now. It's going down. This is another reason. Gold turning down. It's not your enemy if you're in crypto. Silver turning down. It's not your enemy. You actually want, as a crypto bull, gold and silver in good shape and going up, and a sinking dollar. That's what you want. Dollar death, Bitcoin good, gold good, silver good. That's what you truly want. This whole warfare of crypto versus, I actually think they could zeroize crypto tomorrow. They would have kept most of you out of being sufficiently sized in precious metals. A brick in your hand can never be taken away from you. Electronics and all sorts of things, there's a different realm there. There's a whole different realm. And I will show you even what we spoke of in that, and it'll be released later today. I said broadening structure. It's quite a pity. I'm watching this. I'm almost a little bit, it's like even a bit worse than I thought. So this isn't supportive for good Bitcoin. Again, megaphones. You don't know it and you won't learn it, and you can think you can reverse engineer it. People that are poverty mindset that think they can learn something for nothing end up learning very little or getting the wrong end of the stick. I can't change that if that's how you come, but I can tell you that that broadening structure told us a down. Last night, just finished the interview, and I said, we've got the same broadening structure, we're leaning, and we've got a fractal there. We're probably going to go down. And he was saying, and he's got a channel full of gold, silver, and platinum bugs that all want to see it. I said, down. I'm telling you, it's going down now. The macro, great. The short, medium term, down. And I'm just turned to it now and I've seen it. Now you think that's going to be good for Bitcoin? I am not happy about seeing real smackdowns on the precious metals. Bull poles with ascending megaphones. You don't know what that means. You can find out and how we utilize it and how we draw it. Otherwise, you can think you've worked it out for yourself and muddle forth. But this is not particularly supportive for the Bitcoin narrative. Silver, smackdown, same broadening structure. I've literally just flicked in it. I didn't even know I was going to cover this. I went on my rant as I tend to do, and next thing you know, silver has been in broadening structure descents for ages. Slight rising wedge, descent, broadening structure. I said to him, we're not finished with the third impulse. We need another leg down to finish and get across to the wedge. That's when it gets better. And that will be damage for the dollar. So they will tell you, go mad into bull. They will not have checked the gold market for you. They will have not have checked the silver market. They'll have no fucking idea where the goddamn dollar is going. And they're going to be chasing momentum and saying it's going up. You can decide who you follow. But there's a lot of shit out there. And I've just ensured they won't find our YouTube for all my swearing and cussing, but that's it. Okay, what do you guys say? You want to talk alts? Bitcoin is your direction. This is what you should be looking at. This is what you should be looking at and understanding. The big machine. Get the big machine right, you get lucky with your alts. Go long alts at the wrong time, you get murdered. You get murdered. Silver crushed. Below 22, below 22. But it's in a falling wedge, and it's a 3-impulse falling wedge, and it's close to the end of days for this sell-off. It is actually becoming the best buy. This is a crypto channel, so I'm not going to bore you much longer. By the way, if you're into crypto, why have you not transformed some of your wealth into hard-hitting, proper heavy metal that is legit, that shines, that can't be taken off you when they do sunspot activity, took the entire grid down, and wallets and Bitcoin's been cancelled, and central bank digital token is the only blockchain allowed property from now on. Dystopia, totalitarianism. Well, I'll leave it to you. If you're going to play it all and you want to brag about it, like someone I heard, I'm 99% all in crypto. Another YouTuber, big mistake. Big mistake. Big mistake. If you don't think this thing was invented by the same people who are trying to rule you and own you, then you're a fool. This is going in for a third low, and this is a real buy zone. You should be picking it up at 21.5. I gave him the levels. You'll watch this come out. Go support Tom Brodovic. Palisade, gold, recorded last night. Sell off in silver and gold. Go watch him. You can go see what I said. You can go see the same structures that were drawn. It's selling off. It's got to go down. Again, go watch it. It will be out. He's editing it. It'll probably be out in a week. It was last night. Look at what it's doing today. Perfect. By the way, platinum also sold. Same company. You can buy a bar of platinum. This should be hitting a low. That will be the final low of one of the crushed. I'm going to give crypto people a small education of the world outside there in terms of precious metals that you should be thinking of. That is your third impulse finished on platinum. This is a macro call. You've got this for free from me. My community has had it for a while, and we said we're waiting for that final sell-off. Basing ascending grind line broken. False break attempt to get away. Brought back into the wedge. Down into the 3. This is it. By the way, platinum, hopelessly undervalued compared to palladium. Hopelessly undervalued against gold, hopelessly undervalued of all precious metals. It's one of the most rare things to find. You only can really find it on a meaningful scale in Russia and South Africa. Yes, there are other mines in some other places, but 80% of it comes from those safe havens. Yes, indeed. Divide this by so many other things, including Bitcoin if you want. This is as cheap as chips and should be gobbled up like no tomorrow. Divide it by palladium, which has outperformed it unbelievably, and you can see this chart right here. And I'm going to show you on, wipe my face a little bit first, clean up. I'll show you on the monthly time frame, and I will log scale it, regular scale it for you. So in 2009, the bottom of the great financial takedown, planned pump and dump scheme, brought to you by your central banking cartel of resident criminals, you could have got 5.5 palladium ounces to get a single ounce of platinum. The most beautiful, beautiful metal. Don't all start a yellow lives matter now, because it sounds like I'm being a white nationalist pig choosing platinum. But I do love the platinum. And it spilt and it spilt and it spilt. That is how many ounces. You needed 5.5 palladium ounces to get you 1 ounce of platinum. They're part of the same platinum group of metals. Today, less than half. You need less than the 0.5 palladium to get 1, and you're in a macro extreme falling wedge that you've dribbled Pippi out, that at some point I think will get very powerful. So they're in the same group. That's been a lot driven by EV vehicles using more palladium, and diesel vehicles being cut back on platinum. It's led to a super undervaluation relatively. So you're in crypto. Have you diversified? If they zero this game, how much of your wealth do you have elsewhere? In stinky stoinks, trading the stuff you portfolio of pigs that are designed to run your life, and precious metals, because those are the things that will go up. Yes, crypto goes up faster. It might be designed to be that way. It might be designed to capture all your wealth. Okay.
Can you take a look at OMG and Eagle?
So we'll do literally 2 alts. We are discussing in our community certain alts. I'll do OMG. And do you mean Algo Rand or E Gold? EGLD. Okay. You see, it's very difficult to analyze something that's just done a macro major pump. It's a bit like I'm a tracker. You know, I'm following animals when they're grazing and they're eating. If they suddenly get scared and they have a major flight and they just run, it's very difficult to tell you which, you know, too much information. That is just a streaky run. I mean, there was the structure it was creating during the falling wedge period for all alts when we gave you the Ethereum long there. So if you're a fan of the token, you should have bought it there. Then it started to broaden, but it had so much momentum, it just spiked out of the broadening. So on its own, we don't trade broadening as bear necessarily if we are bull Bitcoin and bull alts, which we have largely been in this entire reflation since this falling wedge, up until Bitcoin ran 52K, at which point we said, you've just run the 61.8 on Bitcoin, you've just run a flat bottom, tiring HVF's target, you should be getting defensive. Which means the alts should have been sold. They should have been locked in for wherever they were at that point, and all of that. There have been 1 or 2 alts that have pumped higher since, regardless of the September 7th crash. This looks like one of them, but what's there to analyze in that, apart from like a straight line? You can't chase into something like that. That is FOMO, and that is punishment. You just want to say you're in the fastest mover. Well, if you got in at the top, it's dumb as all hell. And at the moment, it's made a marginally higher high and is a bit overcooked. So some form of continuation and pullback is likely. I don't like that on the shorter time frames, and I don't like that. I mean, well done if you were in from the beginning, and the beginning for me is where I showed you on the falling wedge. Everything else just too strong, and now you've also made a lower low and a higher high. That's expanding volatility. So for me, there's nothing to do here now. You should maybe have taken some profits, and you'll see if it comes off. If it's a long-term hodl, you're still in loads of money, you can keep holding it. But as a trader, with a trader mindset, there's nothing to trade there. The other one was OMG. So OMG started to go quite great, but the one thing I said, it's previous, so the previous one made its target beautifully, and then extreme overperformed and then supported on our funnel. So it said it's not invalidated, it's bare, it's going to hold up. Then we had it like this, a pushed in one, and then it started to look weak, and then a lot of things got a bit dicey. And we did shoot and scoot rules. Why? Shoot and scoot, we're not adhering to process, because of that sell-off that went with the September 7th smackdown. In other words, there's much more uncertainty. I don't hold anything to go into loss for very long. It's calmed down. It was a bit volatile, a setup. Compare it to this. So it was skittish, but it could have done it. But the minute it looked tired, we were getting out, and we got in early because we like to be early. I made money on OMG, but I never made target because it didn't make target. And I'm glad I'm out of it, but it's calmed down. But that's not the way I like to see things calm down with a flag structure like that, especially as it's dripping through it. So right now, I'm happy that I've been in it, and I was happy I'm back out of it. And I think there's a bit of a risk. And of course, the most important thing is, what does Bitcoin do? Which is why you've just spent, I don't know how many minutes listening to me, mainly talk to you about the most important thing. What is Bitcoin going to do? And I've explained to you how it goes wrong, and I've explained to you how it goes up. I've told you the levels that if they fall, you must get out. And I've told you that if it continues to go up, where it should go up to, according to key levels of significance. So you have all you know to do your own trading, and I gave you those levels entirely for free. And if you want to learn how to do this more thoroughly with yourself and get similar updates, you should be booking a call on the link below. Otherwise, you should follow the free YouTubers and go heavily long when the momentum looks awesome and get slammed. That's basically it. On that sexy note, I salute you. Have a great week. The weekend is coming. Don't forget, Reset Sniper is on Odyssey. Backups for all these videos are on our Odyssey channel. You must search the Market Sniper. Then you will get Crypto, Market Sniper, and Reset Sniper. Reset Sniper has a small library token fee. We reduce it as library token goes up. We are encouraging people to get off YouTube onto decentralized platforms that do not ban you for pointing out the criminal cartel that exists. That is all I can say, and as far as I can go. Have a great weekend. I salute you. Goodbye.